Hi, this is Jay and welcome to Advice 360. Today let us understand what is stock market and what it does. I will try to keep it as simple as possible, so stay connected till the end. The term stock market or share market are same. It is a place where shares of public listed companies are traded. In simple words, it is a place where you can buy or sell any company's shares. A stock market does not deal with goods or services, instead deals with securities. Securities are financial instruments which has a monetary value and can be traded, such as stocks, bonds and many more. A share is a position of ownership in the company. When somebody buys shares, they buy some portion of ownership in the company. That means if the company makes profit, they will also get a portion of it, and if it incurs loss, then they need to bear the loss as well. Let me take you through a small example. If you want to start your own business, but you have only 1 lakh rupees, but to make the business functional or to expand, you may require another 1 lakh. So in this case, you might go to your friend and ask him to invest another 1 lakh, wherein you will offer him a partnership of 50%. In this case, in future, if the company makes profit or loss, it will be equally borne by both of you. The same thing in a bigger scale happens in stock market. In order to expand or build the business, founders require more capital, and this is where stock market helps, wherein even a common man is able to invest in the company and can create wealth. At the same time, companies are able to take care of their financial requirements. As we all know, during the ancient times, trade was done through barter system. Over a period of time, when civilization was in place and currency came into picture, the system of trade had developed manifold. Even in the 15th century, trade used to happen also through exchange of debts, promissory notes, bonds in the respective countries. Some big companies like Dutch East India Company, the Dutch now called Netherlands, wanted to earn more by exploring and trading with other countries. That time, people used to explore through ships for business. The world map was not yet discovered completely. The ships for trade used to go very far and sell their products to bring back wealth. As it used to take a lot of time, required a lot of money, and was risky, wherein companies were not able to afford the expense, so they openly started asking people to invest in their ships. So the people who were interested in investing used to come to the docks of the ships for bidding. Once the ships bring back the wealth, it was distributed with all the investors. This was risky and many ships never used to return, as either the ships were lost, broken or looted. So, in order to reduce the risk, investors thought of investing in multiple ships than investing in one, so that the probability of some ships coming back and earning was more. Over the period of time, this system became very successful as the financial requirement was taken care by multiple investors, wherein they also used to get the profitable pie from the wealth generated from the trade. This idea was properly structured, and the first stock exchange was formally established 400 years back in 1602 in Amsterdam for trading in stocks. So now let us understand what is a stock exchange. It is a centralized location, office or building where securities such as stocks, bonds of the registered publicly traded companies are bought and sold. Stock exchanges act as an agent to the economy by facilitating trade and disseminating the related informations. Today, almost each and every country has a stock exchange. Here we can see some of the top stock exchanges of the world like New York Stock Exchange, Nasdaq Stock Exchange, Japan Exchange Group and so on. This market is divided into two types, primary market and the secondary market. Primary market is where companies decide on the share price adhering to the regulations, demand and supply and bring it for sale. For example, if a company is valued at 1 lakh rupees with a value of 10 rupees per share, the number of shares available in the market will be 10,000. Here the face value of per share is rupees 10, which is fixed by the company based on the demand and supply. The more the demand, the more will be the per share price. Every share has an equal value. The promoters or the founders will try to have more number of shares or the majority of shares so that they can have a control over the company. Secondary market allows investors to buy and sell shares. Any person who is holding a certain amount of share can sell in full or partial quantity. Here we need to understand two terms. One is LTP and one is CMP. LTP indicates the stock price at which it was last traded or was last executed. CMP stands for current market price in which you can execute your trade. Stock exchange is a secure place where trading is done in a systematic way. It acts as a solid barometer to measure the economic condition of the country. Stock exchanges helps companies to grow and expand. It gives a platform for people to invest in the companies of their choice. Stock exchanges helps to create thousands of job and career opportunities. Stock exchanges always has an eye over the company's management and force them to adhere to the rules and regulations. Overall, it brings the transparency in the entire system. Now let us know about the Indian Stock Exchange. In India, we have two stock exchanges, Bombay Stock Exchange and National Stock Exchange. They are commonly called as BSE and NSE. Bombay Stock Exchange was Asia's first stock exchange established in 1875 at Dalal Street, Mumbai. It is the 10th largest stock exchange in the world with over 5,500 companies listed in it. National Stock Exchange was established in 1992, which was fully automated with all modern techniques. What is SENSEX and nifty in context to stock exchange? Since there are thousands of companies listed in stock exchange, it becomes really hard to track every stock and market performance at a time. Therefore, sample of top companies are taken which have more weightage in the stock market. And here is where Nifty and Sensex helps. Sensex is also called BSE 30, which consists of top 30 established and sound companies listed in Bombay Stock Exchange. Similarly, Nifty, which is also called as Nifty 50, is the market index consisting of 50 established companies listed in National Stock Exchange from 24 sectors. The companies in both Sensex and Nifty are selected based on the market capitalization. These barometers help to analyze and show how stocks of each companies are performing and shows the current status. In India, hardly 5% of the people invest in stock market, whereas in developed countries like US, more than 50% of the people invest in stock market. Why so? The main reason is risk appetite and knowledge of stock market is very less. At the same time, many scandals such as Ketan Parikh scam, Harshad Mehta scam, Satyam scam and many others gave a negative image and made people more scary to invest in stock market. This market has built fortune for many and many people have lost their entire wealth. When we talk about stock market, we cannot miss the name of Warren Buffett, who is the most successful investor of all time. In India as well, we have lots of people who have made millions and made their mark, such as Rakesh Jhunjhunwala, Radhakrishan Damani and Vijay Kedia and so on. When a private corporation wants to sell its shares to the public and when it is for the first time, it is called as IPO, which is initial public offering. Through the IPO, the company gets listed in stock exchange. We can buy shares offline or online through the internet. The investment of offline purchase of shares was earlier done directly by going to the Bombay Stock Exchange. But nowadays it is very easy. All you require are the three accounts: bank account, trading account and the demat account. A bank account is needed as you would need your money to purchase stock. A trading account is required which gives you a platform which allows you to trade and invest money. And lastly, the demat account is used to hold shares and securities in electronic format. In other words, it acts as a warehouse to store all your securities. Nowadays, almost all the banks can help you to buy 3-in-1 account and help you with the investments. There are a lot of brokers as well in the market who can help you with the same. Banks or the brokerage firms will charge some nominal fees in this regard. Shares or stocks, mutual funds, derivatives, bonds, etc. can be traded in the stock exchange. In the stock market, where all such big institutions and companies are involved and doing such huge transactions, then definitely we require an equally strong governing body to control and monitor this capital market. That is where SEBI comes into picture. SEBI stands for Securities and Exchange Board of India. This is a regulatory body authorized to control and regulate the financial market and was established in 1988. SEBI ensures transparency and safety for investors. Its checks on the price rigging, prevents insider trading and fair practices. This video was just a tip of the iceberg on stock market. I hope I was able to bring some value and understanding on this subject. So as always, thanks for watching. Stay connected, stay blessed.